Well, guys, we've finally got a name to put to the dark forces who we're blaming for everything that happened in 2025. It may be right, it may be wrong, but whenever anything bad happens to a certain group, they've got to have some party or other group to blame it on. There's got to be a bad guy. It can't just be bad luck, bad circumstances, a bad, series of events. There's got to be a bad guy. And now crypto has got a bad guy to blame all of 2025 on, basically. So we're going to talk about that because some new details have emerged and they're interesting. But maybe more importantly, some very big things are happening sort of under the radar in Cardano. And I think it's maybe some of the most promising things we've seen in Cardano in a long time. So we're also going to talk about that. If you were very happy to notice today that we finally dipped back above 30 cents, or if you're finding value in these videos, please consider delegating to the Army of Spies DRep address and the Army of Spies stake pool, ticker AOS. All right. Thank you for joining, everybody. Thank you for joining. Let's see who's here. We actually do have some very promising Cardano stuff to talk about. So we're going to talk about the Jane Street stuff before that, but we've got some very promising Cardano stuff to talk about. So Joe David says, what is a Jane hole? We are going to talk about it. We're going to talk about it. Also very excited. Cardano for the win. Bonjour. Comment ça va? Cardano for the win says, bonjour, everybody. Pucky Hawk says, are the Jane holes infected? I mean, all we know about, our number one Jane hole, don't forget, SBF worked at Jane Street. SBF came from Jane Street, right? No pun intended. But he was involved in some very, very based on the fact that we've seen the participants, I would say highly questionable, polyamorous. What did he call? What were they calling in all the articles? They were calling his little love pods. They had like a name for the groups of people that were involved in his polyamory. And just aesthetically, I'm sure outside of, being thieving bastards, outside of all that and the fact that many of them would be going to jail, they were just not aesthetically, they're not aesthetically pleasing people. This was not a love pod, a polyamorous love pod of supermodels. This was, who it was. And so I would call it a very questionable polyamorous situation he was involved in. So could the Jane holes be infected? I mean, only their doctors know. Perhaps it was a poor choice of words. I don't think so. I think it was an excellent choice of words. So happy to see 31 cents. Me too. Boom. Man, I'm so excited. I'm so excited to see 31 cents. I never thought I'd be saying that. I kind of feared I would, but even when we were up at $1.20, part of me was holding out hope that we would never see the 20-cent range again. Boy, we were all wrong. We were all wrong. Jane rabbit hole. It is a car swallowing sinkhole, the Jane hole. Let's go, Streetwise. Let's go. How's it going, AOS fam? Says Raz. Jane holes. Let's fucking go. Omar's right. Jane holes. Let's fucking go, says Hilldog. Afro in the Wind says, what about the huge hole in my portfolio? I mean, a lot of people are saying it's due to the Jane holes, bro. They're saying it's due to the Jane holes. Let's go. Delegate AOS stake pool. Ticker AOS. Thanks, Hilldog. Let's go. Let's go. Rulo says, hola, what have you done to us, Jane? Exactly. What have the Jane holes done to us? Jay Marie says, hello, everyone. Let's go. Let's go, Jay Marie. Brown Beardo says, if this is New York City, it's too soon. Right now, they're dealing with mountains of snow, blocking the roads instead. Let's fucking go. Yeah. I mean, the Jane holes, they strike where they please. Probably very similar to the strategy for SBF and his polyamorous love pods. He strikes where he pleases. Good morning, AOS. 5 a.m. Let's go. Do not use says, hello, everyone. A like a day is good for your bags. Thanks. Appreciate that. Emilio says, morning and evening all. Yep. The a-hole nest. I would say that little firm is an a-hole nest. Yes. Uncle Thanos is here. Good morning. Do not use his Jane holes are Janes with holes. James Syracuse is here. What's Jane Holes? We're going to talk about it. The Jane Drain. Ankle. It's the Jane Street lawsuit. It is Jane Street. We are definitely talking about Jane Street. Okay, let's jump into it. We've already talked about Jane Holes, polyamorous love pods, SBF's likely game theory when dealing with his polyamorous love pod. We've talked about Jane Hole infections. We've covered a lot in 5 minutes already, but we got to jump into the real details. They manipulated BTC and other crypto centralized exchanges and caused failures. Allegedly, bro. Allegedly. Jane is going to be pissed. Not our Jane. We're talking about Jane Street. We're talking about Jane Street. Not our Jane. We love our Jane. But we don't love Jane Street, I don't think. So just want to make that clear. Allegedly, yeah, it's a lawsuit. Dude, we don't want to get sued for defamation tonight. My goal every night, the overriding program. There's a lot of things I don't say because there's this overriding program running my brain that's called "Don't get sued for defamation." Don't get involved in a defamation suit. So there's a lot of allegedly kind of talk on this channel, and I'm not representing this as fact. That's the reason that's going on, so that nobody gets sued for defamation. Okay, I think this is well put though. Jane Street right now. You guys remember this CEO and the HR manager from the concert footage, not married to each other, married to other people, and this was the look on their face when they realized they were on the camera. So I think this is Jane Street today, knowing what has been possibly exposed. So let's look at the reaction. Let's look at what's happening in the markets that's getting everybody so interested in this. So Omar says it stopped at the moment allegations were made public. It's a lawsuit though. It's a lawsuit, and we don't know how the lawsuit's going to turn out. And entities like Jane Street, they have some lawyers. They have some lawyers. So we don't know how it's going to turn out. And they can also file suit against anybody who says the wrong shit about them. So we try to be careful on this channel. Jane Street just pulled a full Terraform deleted their entire X history faster than UST depegged. Oh, I didn't know that. Interesting. Hoochie, very interesting. Guess where the algo stops? Dumping at 10 a.m. sharp. The only thing left to short is their own tweets. So I'm not an idiot. It was Jane Street. We're talking about Jane Street. We're talking about Jane Street, not any individuals named Jane. We're talking about Jane Street. Jane Marie says, I love Mary Jane. We're also not blaming Mary Jane for anything. Mary Jane, perfectly fine. But we're not blaming. Allegations have been made about Jane Street. Allegations. This is very much tip of the iceberg type shit. But actually, we're going to go over a post here that is going to go, I think we can go to a little bit deeper level and explain what's the bigger problem that's going on. That's not really just Jane Street. It's really the regulatory regime, but we'll get to that. First, we'll cover the stuff that's getting everybody excited though. So this post says, this is truly incredible. The sell side order book on BTC USDT has completely flattened. Major sell walls have disappeared. For weeks, every time Bitcoin lost a key level, a block of 888 BTC would suddenly appear on the ask, capping any attempt to reclaim that level. Now it's gone. The lid has been removed. If that price suppression was coming from Jane Street, it seems they're finished. Bitcoin might finally be free to run higher. This is what everybody thinks. And I found this to be entertaining. PsyOp Anime is not just involved in the best current, very, very current event IR videos, anime videos, AI produced anime videos. They're also into crypto. Everybody's charts for the last few months are completely fucked. Jane Street getting caught is the best thing to happen in a long time. I like PsyOp Anime even more after seeing that shit. They do produce some awesome, awesome fucking videos. Okay, here's another post. This is insane. Since Jane Street was sued 2 days ago, the 10 a.m. manipulation has stopped. Bitcoin is up 10%, adding 120 billion to its market cap, and the BTC weekly candle has turned green after 5 consecutive red candles. We all know what happened in Cardano. The total crypto market has added nearly 200 billion over the same period. Yeah, my trending topics all day long was Cardano reclaims 20%. Fantastic. Omar says, put Jane Hole into Google and you get descriptions of pre-rolled joints and vaguely pornographic women's names. That does not surprise me. That sounds about right. So, so what we're going to describe, I'll explain what I mean by a Jane Hole in just a second. It is also what I'm euphemistically calling the people at that entity, but it means more than that. It means a little bit more than that. We'll get to it. So let's jump into what everybody's getting really excited about, and then we're going to go a layer deeper. We're going to go a little bit layer deeper because there is another layer that kind of, and they kind of the really the shit that everybody's getting crazy about today is like it's a little bit shallower interpretation of what's going on, but it might also be true. Even if all the deeper level stuff we're going to talk about is true, that has to do with the way these markets actually work. Even if all that's true, this shallower, more dramatic, sounding thing could also be true. So they could both be true. So when we go through the deeper stuff, I'm not saying that invalidates what we're about to cover, the slightly more dramatic stuff, right? So Joe David says, so if manipulation is over, does that mean $10 ADA? Hell yeah. So we're going to cover why it's not Jane Street is not what's going on is not isolated. Let me put it that way. It's not an isolated problem. It's not one entity. It's not one bad guy. I mean, this is the story of human history, right? Whenever anything goes wrong for anybody, whenever anybody's situation sucks, what do they blame it on? Do they blame it on their own lack of ability to outcompete their neighbors? No. Do they blame it on, their own mistakes? No. Do they blame it on their own lack of competency? No. They blame it on the neighbor. If the neighbor is doing better than them, they always blame it on the neighbor. It's the neighbor's fault that they suck. The neighbor is suppressing them, right? It's always the enemy. Any human group has always blamed shit on somebody else. And that somebody else usually happens to be somebody doing better than them or getting more out of the situation somehow. Or it's always some outside, it's always some like outside group. It's always some other group. It's always the other, right? So I think we're doing a little bit of that in crypto. We've like put a name to our problem, and we named it Jane Street. But is that really the problem, or is it a bigger problem? So that's what we're going to talk about tonight. So let's cover the allegations against Jane Street. So there's a whole lawsuit. I'm not going to go through the claim. We could do that sometime if people really want to, but that usually bores people to fucking death. So we're not going to do that tonight. When I go through actual claims, like the actual lawsuit that gets filed, the claim, when I do that, people get bored to tears. So we're just going to cover this little article, which I think, I'm not going to say this is all accurate. I'm not going to say I'm co-signing this. I'm not going to say I'm representing this as fact. I'm saying this is an article somebody wrote, right? And it got a lot of views. So it got 1.2 million views because it says some interesting shit. Let's see, what's the number now? 1.3 million views now. Okay. So this article goes through this whole story about this intern who worked at Terraform Labs. Terraform Labs, is associated with Terra, Luna. He leaves Terraform Labs and he joins Jane Street. He joins Jane Street as a full-time employee in September 2021. Jane Street is also where SBF learned to trade before founding FTX and Alameda. Infamous names at this point. Infamous names. Speaking of which, some, a certain VC firm, that's involved in all this, definitely funded at least one Cardano DeFi project. If people don't remember that part, they definitely threw some money to a certain Cardano DeFi project. Not that that's any fault or reflects badly on that project, right? It's like if you're in Cardano and you were a project at that time, you were taking money from whoever the hell could give you money. So, more power to them. But it's something that's a little detail that gets lost in the shuffle here. Anyways, they funded a lot of things, including at least one project in Cardano. I think it was actually multiple projects, but I can remember at least one. So anyways, according to the lawsuit filed by Terraform's bankruptcy administrator, Todd Snyder. So this is the bankruptcy administrator filing this lawsuit. That says something, right? So Pratt became the bridge between his former employer and his new one, between Jane Street, and this is the allegation, between Jane Street and Terraform Labs, through a chat group that court filings are describing as Bryce's secret. The lawsuit alleges that Jane Street used this channel to obtain material non-public information about Terraform's internal liquidity moves. So we're talking about a form of insider trading. We're talking about a form of insider trading going on here. So this is different than what we're going to talk about later, which is going to be more of a systemic fucking problem. I'm going to call that a hole in the system. So I'm calling these guys Jane Holes. If all this is true, these motherfuckers are Jane Holes to me, right? But Also, there's a hole in the system that contributed to all this, right? And entities like Jane Street, who are authorized participants in this whole system of market making for these ETFs, were able to exist inside this hole, right? And it's really a mistake in the construction of the regulatory regime. Actually, it's not, because the regulatory regime is coming from the ETF equities world and it's being applied to crypto, and everything gets all fucked up. So that's what that's the deeper level we're gonna talk about. But that's not in this article. This article is just about the Jane Holes. So according to the lawsuit, he became the bridge. The lawsuit alleges that Jane Street did some insider trading, basically. The critical moment came on May 7th. Terraform withdrew 150 million. So the numbers are important here. So Terraform withdrew 150 million. Again, they're the entity behind Terra USD and Luna. So they withdrew 150 million from Curve, a decentralized trading platform that was the main liquidity for the stablecoin. Within 10 minutes of that withdrawal, so Terraform withdraws 150 million within 10 minutes. And before anybody knew, basically before Terraform informed the public or made any announcement, a wallet linked to Jane Street pulled 85 million in Terra USD from the same pool. So 150 pulled out, within 10 minutes becomes 150 plus 85. So here they're quoting a post. The combined selling pressure helped trigger UST's break from its dollar peg within days. Luna's algorithmic mint and burn mechanism spiraled out of control, hyperinflating the token supply and destroying 40 billion in market value. So really interesting, right? You pull, hundreds, couple hundred, a little over a couple 100 million. What is that? 235 million. You pull 235 million and it results in the destruction eventually, according to these allegations, of 40 billion in market value. So this is a very negatively leveraged event, right? 235 million results in the destruction of 40 billion. Jane Street, according to the lawsuit, avoided more than 200 million in potential exposure by unwinding its position at precisely the right moment, mere hours before the Terraform ecosystem collapsed. The lawsuit describes trades that would have been impossible without inside information to which Jane Street had unique access. How did they have that unique access? They already told us through this secret chat group called Bryce's Secret. Jane Street, for their own behalf, calls the suit desperate and baseless. Of course they would. Of course they would. You all remember Do Kwon, who we talked about using the prison wallet on his Trezor device, is now serving a 15-year prison sentence. Snyder has also filed. So Snyder is the bankruptcy administrator, Todd Snyder. Let's see, where are we? Snyder has also filed a separate $4 billion lawsuit. So $4 billion with a B lawsuit against Jump Trading over alleged manipulation of the same collapse. So these are the same names everybody's been talking about for a long time, right? When people are like, who are the bastards on Wall Street? If there are bastards on Wall Street suppressing us and holding us down, what are their names? And the names that are coming up in this article are names that people have made allegations about in the past. I'll put it that way. People have said bad things about both Jane Street and Jump Trading in the past. People in crypto have said those things. So, which suggests a systematic investigation into institutional conduct during the Terra death spiral. So this is important. So what this article is alleging right here is a systematic investigation, and they're not alleging, they're suspecting. They're alleging a lot of things, but they're suspecting that there's actually a systematic investigation into the conduct of institutions that may have led to the Terra death spiral, right? And this is a conspiracy that's been around in crypto for a long time, although a lot of it was aimed at Binance. You notice here, it's what's coming out doesn't really involve Binance, doesn't really have anything to do with Binance. It lines up with exactly what CZ has been saying. CZ was like, dude, we would have had nothing to gain by this. Why would we have done that? Why would we have destroyed the crypto markets when, all of CZ's personal wealth is in crypto and Binance's whole business is in crypto? Like, why would he have ever done that? And he has a good point. We've talked about it on the channel that he had a good point when he said that. And this is exactly consistent with this. None of this points at Binance. So beginning in late 2024 and accelerating through 2025, Bitcoin's price began doing something that traders noticed but couldn't explain. Every trading day at 10 a.m. Eastern, coinciding with the US stock market open, Bitcoin experienced sudden and sharp sell-offs. The drops were precise, algorithmic, and wildly disproportionate to broader market conditions. They wiped out leveraged long positions, triggered cascading liquidations, and then reversed within hours. Jan Hoppel and Jan Alleman, the co-founders of blockchain analytics firm Glassnode, documented these patterns through their shared account, which I guess is called Negentropic. Negentropic. They tracked the algorithmic precision of the drops across months of trading data, and the pattern was not subtle. Charts from December show Bitcoin falling from 89.7 to 87.7 within minutes of the 10 a.m. open, erasing 171 million in long positions before recovering. This happened every day, day after day. That sure sounds like something a bunch of Jane holes would do, right? The same kind of motherfuckers who would have polyamorous love pods in the Bahamas, or is that what they were? I think they were in the Bahamas. Yeah. So same bastards who would come up with that kind of plan would do this kind of shit. In my mind, in my opinion, according to my suspicions, Jane Street, as a designated market maker and authorized participant for multiple Bitcoin ETFs. So we're going to get to that category of institutional actors within the context of Bitcoin ETFs. We're going to talk about that in much more depth in just a second. Had both the inventory and the infrastructure to execute coordinated selling at scale during predictable liquidity windows. Selling into thin order books at the open would depress the price, trigger liquidation cascades among leveraged traders, and create buying opportunities at lower levels. The firm could then re-enter at the bottom of a move it had manufactured. Then something revealing happened. According to Glassnode, the daily flash crashes ceased after the Terraform Labs lawsuit filings became public early last year. Bitcoin's price stabilized significantly in subsequent trading sessions. The behavioral change is consistent with a firm that suddenly had legal discovery and depositions to consider. Very interesting. The 10 a.m. pattern resumed in Q3 2025. So the Terraform Labs lawsuit becomes public early last year. Then in Q3, this 10 a.m. pattern resumes. By December, it was back with full force. Basically, the 10 a.m. dumps stopped the moment Jane Street had lawyers looking over its shoulder and started again when the heat died down. Again, not statements of fact from me, allegations in this article that was posted by someone other than me. The machine, in its Q4 2025 13F, Jane Street disclosed holding 20 million shares of IBIT worth almost $1 billion, right? $750 million, a little over $750 million. The firm added 7 million shares during the quarter alone, a $270 billion increase. At one point last year, Jane Street's IBIT position was valued at $2.5 billion. So they're the numbers. Simultaneously, the firm boosted its holdings of MicroStrategy stock by 473%, accumulating 121 million, even as BlackRock and Vanguard divested billions in Master during the same period. MicroStrategy. Just in 662 billion, Jane Street just disclosed they bought almost 750,000 Bitcoin, over 750,000 MicroStrategy shares. So the article is claiming this looks like bullish accumulation if you don't understand what Jane Street actually is. Jane Street is one of only 4 firms authorized to conduct in-kind creations and redemptions for IBIT. The others are Virtue, Americas, JP Morgan, and Merex. Jane Street is also an authorized participant for Fidelity's and Wisdom Tree's Bitcoin ETFs. This role gives the firm direct access to the mechanism that connects ETF share prices to actual Bitcoin. Jane Street can move real Bitcoin into and out of the ETF structure, arbitrage price differences between the fund and the spot market, and maintain inventory positions that dwarf what any normal market participant would accumulate. So that probably means nothing to you. That price seems like just a giant word salad and very difficult to follow. We're going to talk about some of this stuff in more detail in a second. But for now, all you need to know is that the authorized participants that are part of this ETF market making going on, they can do things that no one else is allowed to do, right? And a lot of it has to do with the fact that they can basically basically, when you hear what it actually is, it's going to feel like they can execute naked shorts with no timeline. That's what it's going to feel like, and their cost of capital to do so is nothing, right? So something that none of us are allowed to do. None of us can do, right? Basically, Jane Street has direct access to the pipe that connects the Bitcoin ETF to actual Bitcoin, and almost nobody else does. The crypto press reported the 13F as a sign of institutional conviction. The people who actually understand market structure immediately said otherwise. The Invisible Book. Former hedge fund manager Michael Green called the bullish interpretation of Jane Street's 13F painful. He pointed out that Jane Street's IBIT position is almost entirely offset by undisclosed options and futures positions, and that they are certainly not accumulating a position in Bitcoin. That's how market making works. So this is really interesting. So the difference here is everybody was like, oh, they're buying exposure to MicroStrategy. And this guy's like, people don't realize what's going on, right? It's like they can short the ETF at a zero cost of capital and hedge against it with exposure without buying at spot, right? Because the way things would normally work, if you were shorting, there would be arbitrage going on and somebody would be buying at spot, right? Somebody would be buying at spot. And the way all this is set up, what you can think of simplistically as naked shorting is going on, but there's no buying at spot. There's no arb trader buying at spot to offset that, which is suppressing the price discovery mechanism. So we'll get into a little more detail on that in just a second. So former prop trader Ryan Scott was blunter. Anyone posting this as bullish is committing a capital offense. This should be, you'll never guess who also has offsetting derivative positioning that does not need to be reported. Exactly. Nick Batia reduced it to incentives. Jane Street owns IBIT so that it can write options, arbitrage, and everything else a quantitative trading shop does to make fast money. Here's what this means for every person who holds Bitcoin or IBIT. A 13F discloses long positions. It doesn't require disclosure of options, futures, or swaps. When Jane Street reports holding 790 million in IBIT shares, the filing tells you nothing about whether those shares are hedged by puts, offset by short futures, or wrapped in a collar that makes the firm's net Bitcoin exposure zero or even negative. The public just sees accumulation. The actual position could be a massive short that looks like a long because the offsetting half of the trade is invisible under current disclosure rules. So this is the whole. And it's not just the disclosure piece of it. The disclosure piece is a big part of this whole we're talking about. But all of these authorized participants can do this. They can all do this shit. Not only is it not disclosed to you, but their cost of capital to do this is essentially zero, according to a different approach we're going to read in just a second. And they don't have to buy at spot to hedge against it, which is a problem for the Bitcoin market and all of us who are basically dealing with spot trading. So the 13F is a photograph of one side of the balance sheet. Nobody outside the firm can see the other side. So it's giving the wrong signal to the market because the market, there's this huge asymmetry of information. Jane Street knows what the other side of that looks like. Everybody else does not know. This is where the question every Bitcoin holder should be asking becomes unavoidable. If the firm holds in 790 in IBIT shares and offsets that position with 790 million in put options or short futures, the net exposure is zero. If the derivative book exceeds the equity position, the net exposure is negative, meaning Jane Street profits when Bitcoin's price falls. In either scenario, the firm has every incentive to use its privileged position as authorized participant to suppress the spot price, trigger liquidations, and harvest the spread. What is Jane Street's actual net exposure to Bitcoin? The current disclosure framework does not require them to answer that question. So Jane Street's conduct in Bitcoin markets has not been tested by regulators. Its conduct in other markets has. In 2025, the Securities and Exchange Board of India published a 105-page enforcement order against Jane Street for manipulating Bank Nifty index options. That regulator in India found that the firm used coordinated trading across cash and derivative markets to generate 4.3 billion in profits over a 2-year period, with a smaller amount extracted in a single trading day, 735, whatever this amount is. So The regulator described the activity as clearly illegal in any country with functioning financial regulator and issued interim restrictions on the firm's trading. Jane Street strategies in Indian index derivatives followed a familiar structure: exploit privilege, speed, and scale to move one market, then harvest profits in the derivative layer sitting on top of it. Does that sound familiar to anybody? Does that sound like something that might have been going on here? So the hard cap of 21 million in Bitcoin is enforced by the network of sovereign Bitcoin nodes. The cap assumes that price discovery is honest. That's the problem here. Price discovery itself is suppressed by this model, that the market reflects actual supply and demand, and that when institutions hold Bitcoin or Bitcoin adjacent instruments, their positions represent genuine exposure to the asset rather than raw material for derivative strategies invisible to every other participant. In other words, I mean, that's a bit of a stretch to say that the 21 million cap assumes those things. I would say these things not being true definitely cuts against price discovery, but and I mean, we've talked before about how one of the big problem in the GFC was basically like just creating shadow hologram-esque reflections of all these derivative instruments, which sort of like inflates everybody's exposure. But this article is saying, in other words, the 21 million cap only works if the market sitting on top of it is honest. I mean, kind of true, unless you take a Caitlin Long approach to it and you say all of the paper exposure to Bitcoin is bullshit. That's always going to create problems and collapse. And the only thing you should be worried about is self-custody Bitcoin. Like that's the only thing that makes sense, right? So if you're Caitlin Long and you just ignore, you basically don't buy into paper exposure to Bitcoin or crypto at all, and you just think about self-custodied Bitcoin, then this is a lot less compelling. But this argument is Jane Street is one of 4 firms with the keys to Bitcoin's ETF infrastructure. It faces a federal lawsuit alleging insider-driven front-running that helped destroy $40 billion in value. It has been accused of running algorithmic sell programs that suppress Bitcoin's price for months, and it holds the largest disclosed ETF position in Bitcoin while maintaining a derivative book that could make its actual exposure the opposite of what filings suggest. So then the cap is irrelevant when Jane Street can fabricate unlimited synthetic supply through undisclosed derivatives stacked on top of its own ETF inventory. So this is that same, like people like to use the analog of like fantasy baseball. It's like, you could be betting on the actual baseball game sitting in the stands, or you could be playing fantasy baseball, or there could be fantasy baseball based on the fantasy baseball. And in that sense, you can say you're inflating the supply, on a paper basis. But again, the Caitlin Long sort of approach is that that's all bullshit anyway. So then the cap is irrelevant when Jane Street can fabricate unlimited synthetic supply. Bitcoin scarcity is real at the protocol level, but the price discovery mechanism sitting above it has been compromised by a firm that treats privileged access as a profit engine, and the current disclosure framework lets them do it without anyone watching. So this part, I think, is the important part. This is the explanation. This is the real explanation here. Bitcoin scarcity is real at the protocol level. So I agree this doesn't really impact the scarcity, as in the Caitlin Long argument. But the price discovery mechanism sitting above it has been compromised. This, to me, is a very compelling analysis of what happened to us in 2025. And it affects everything in crypto, Cardano included, not just Bitcoin. This very much affects Cardano, and has, as you can tell by the fact we're celebrating getting back in the fucking 30s. Every Bitcoin holder deserves to know, what is Jane Street's actual net position? The question that is unlikely to be fucking answered until we know Jane Street decides the price of Bitcoin. Very stark way to put it, but probably true. This last line, probably, unfortunately, fucking true. This is why we never should have agreed. We never should have agreed to, and we didn't. Let's face it, we never agreed to Wall Street coming into crypto. The problem is crypto isn't crypto unless it's permissionless. And if it's permissionless and there's money to be made, fucking Wall Street and these types of Jane holes are going to come in, right? And this is what they do every fucking time. If there's any way within the laws that matter that they can do some shit that's going to fuck everybody over, but they will make a lot of money, that thing will be done. That thing will be done. That thing for sure will happen no matter what. And in this case, it looks, if all these allegations are true, then this is exactly what happened. So this poster down here, Shaquille Oatmeal, very funny username, says, if these Jane Street rumors are real, would that essentially mean that paper Bitcoin was actually a thing being leveraged by them and suppressing the price? This is the kind of point that Caitlin Long has been making for years. She saw the Wall Street herd coming into crypto, and she told everybody, listen, this whole thing is going to result in a lot of paper Bitcoin, and that is not going to be the same as actually self custodying your Bitcoin. Those are going to be two very different things, and I think she was right about that. I think we're now seeing like the manifestation of that for sure. So Dolph B. Wolf says Jane Street equals rug pull university. I mean, it's not even a rug pull. I guess you could say that. You know, people will probably use that term because they made it look like they had a long, you know, I should say their filing probably led people to believe they had a long position when in fact we don't know what the position is. But it's not really it's a rug pull like the gazelle. It's like a rug pull like the gazelle would say, you know, the lion behind the bush was a rug pull. It's like, oh, I thought you were a bush, and then the lion eats the gazelle. And it's like, nope, I'm a lion, bro. I'm a lion. We always eat you guys. The whole deal is we wake up every day and all we want to do is eat you guys. That's what Jane Street is. Jane Street is the lion behind the bush. So if you're the gazelle and you thought it was a bush, then I guess it is a rug pull. But from Jane Street's perspective, it's just what they, you know, I won't say, let's not say Jane Street. Let's say from the Wall Street perspective, I mean, they wake up every morning, they're like, how can I do this shit? This is all I want to do. This is all I want to do. If it's legal, this is all I want to do. So Brown Beardo says, wow, not Binance. The market trends always seem to be blamed on Binance these days. If someone stubs a toe, allegedly, Binance comes out of the shadows to beat them with sticks. Exactly. And what's funny is, in a lot of ways, I think CZ has more cypherpunk in him than half the fucking founders, half the fucking crypto founders. I think CZ has more cypherpunk in him than a lot of those guys. I really do. So not that he didn't do anything wrong. I mean, he was obviously, I mean, you know, I'm not going to say that he wasn't guilty of the AML KYC crimes he went to jail for, but you know, I mean, cypherpunks never agreed that those things should be crimes anyways. I mean, he's like the ultimate cypherpunk. CZ is the ultimate cypherpunk. You know, I don't approve of some of the parties that were able to basically launder money through Binance in those days. I don't approve of the outcome, but goddamn, is he not a cypherpunk in a lot of ways? Okay, Joe says, if chain analysis is getting better, how long until all this is audited? So what this article is pointing out is that this is not on chain. This is all paper shit going on. So we've entered this Wall Street phase of crypto where Wall Street is going to be doing fantasy baseball on all of our shit we've got going on chain. Like all of us in crypto, all we care about is the on chain shit, right? But Wall Street does not. What they love are derivatives, right? They're going to do fantasy baseball of the stuff that the assets that we think are on chain. And the fantasy baseball is where all the fuckery happens. That's how the GFC happened, right? The big crash, right? The great financial crisis, you know, of our lifetimes. It all happened because of this fantasy baseball shit. That's where all the fuckery happens. And that's what, I mean, Wall Street, they're the experts. They're the experts at fuckery in the fantasy baseball half of finance. So that's what they do. They wake up every day and they're like, how can I be the one who does the most fuckery today? So Jane Street's lawsuit claims they had impossible non-public. So the lawsuit against Jane Street, you mean? So the lawsuit against Jane Street by the bankruptcy administrator claims they had impossible non-public info on Terraform's liquidity pools, front-run trades to unwind exposure hours before the DPEG, and cashed out while retail got wrecked. I mean, that's pretty much the gist of it. They're saying they made impossible trades, basically trades that would have been impossible, you know, without the non-public info. That's what they're alleging. Afro in the Wind puts it well, because they can. Yep. They're going to do it. Anything, there is no ethical consideration for Wall Street, right? You guys have seen the movies. You know what, we're dealing with here. You've seen the movies. That is most of those movies are a true depiction of the mentality we're dealing with here. There are no ethical concerns. There is just like, will we go to jail for this? Will we not? That's it. Those are the only constraints. No way. Give a very special power to just 3 entities and no one else. What could possibly go wrong? Exactly. The whole system is terrible. Sounds like a license to kill. Everything blockchain stands for. Corrupt business as usual. Yeah, I mean, this kind of fuckery is exactly what crypto was built to kill. And now they're controlling us with the same exact fuckery. We need decentralized, cryptographically verified financial systems yesterday. True. Very true. Very, very true. S. Walker says, Pupper asked if you saw the disc in the water. Oh, God, I haven't looked at it yet. Thank you for reminding me. Oh, my God, I can't believe I haven't looked at it yet. God damn it. Okay, thank you for reminding me. I really want to see this. Puppers also said Jane Street has some splaining to do. I agree. They have some fucking splaining to do. I agree with Caitlin Long. Paper exposure to any crypto asset is stupid and bound to fail. It's been the same problem in precious metals, too, for forever. Exactly. Every asset. Dolphy Wolf. Fucking Jane Holes. Exactly. Fuck these guys. I was like, fuck SBF. Like, like when I saw him talking about his what the fuck did he call it? His humanistic philanthropy or whatever the buzz term of the day was. Rational what was it? Rational philanthropy, rational human, whatever it was. When I heard him talking about this shit, I was like, in the back of my head, I was like, God, doesn't it seem like this guy's like up to something? And then it all came out and I was like, God damn it, instincts are never wrong. Whenever anybody seems like they're full of shit, they usually are. And it's always the guys who claim to be the most altruistic. Whenever anybody claims to be very, very altruistic, immediately the fucking buzzer should go off. And you should be like, this guy is some kind of sex maniac who is raping and pillaging in the financial markets. That's the message you should take from people involved with crypto claiming to be extremely altruistic. Brian Packard says, hit the like button, get this out. Thank you, Brian. Thank you. Joe David says, Jane Street, Wall Street, can't we just agree to stick to back alleys? Exactly. The streets have done us wrong, right? She from the streets. They say she's from the streets for a reason. They don't say she's from the back alley. We all know the back alley is probably the dirtier place, but the expression is she's from the streets. In light of the Terraform Labs lawsuit against Jane Street, which regulatory body is actually responsible for monitoring high-frequency trading firms for illicit activities in DeFi markets? So it depends on what. So we have this divide between commodities and fucking securities, right? So, and there's a bunch of other entities that are involved. So part of the problem is that it's this very complicated, nuanced, multi-layered regulatory scheme. And the only ones who the people who, I won't say anybody actually understands everything, but the people who understand it best are the Jane Streets of the world. They're the ones who understand it the best because they have to navigate it. Like the whole goal for them is to navigate it and make the most money. So they're actually the ones who understand it the best. No one with dot money is honest these days. True. Not gel. How much would the fine eat up my profit if we get caught? Yeah, exactly. Don't give a shit about fines. If a giant like Jane Street is being sued for insider trading during the Terra Luna crash, who is actively overseeing institutional market makers today to prevent the next algorithmic manipulation? I mean, according to all these reports, it's all been going on until 2 days ago. So, and I mean, what we're going to cover in a second is that it's not really illegal. The hole I'm talking about, these guys are Jane holes, but the real hole I'm talking about is a hole in the regulatory scheme, a hole in the regulatory regime. So you haven't looked yet. What the fuck? 2023 historical Google Earth, clear as day if you zoom in, screen share for everyone. I know, I'm sorry. I'm sorry, bro. I actually really want to see it. No concern of jail, just how much. Okay, yep. Send her back to the streets. Exactly. SBF and effective altruism. As soon as I heard that term, and saw him talking about it in that one interview in the Bahamas, I was like, this guy's full of shit. I don't believe anything he fucking says. The show Billions is best show about this kind of stuff. HBO, better than Succession. You know what's funny? I know a lot of people who love both of those shows. I've seen neither. So expect another one. Yeah, pretty much. You should definitely expect another one. I mean, this is Wall Street. When has Wall Street not been like, my question is, when has Wall Street not been like this? Hot under the collar. Exactly. When has Wall Street not been like this? And it's like we have experienced the very real repercussions of this shit. Like a bunch of these bastards on Wall Street, you know, may have done this to us. And we're all like legit suffering from this shit. We're legit suffering from this shit. James says, I love billions. Okay. I appreciate that recommendation. I'll check it out sometime. Saza says true. Okay. So let's move on, guys. Yeah, it pisses me off enough. Okay. So here's the deeper level about this. Here's why this is even worse than what we just read, right? Here's why this is even worse than what we just read. Oh, the ignorant bastard. How dare you? You probably don't even know that I love Michael Mann movies. I love Heat. Heat is like the most famous Michael Mann movie. They're making a remake too, which is fucking amazing. But I love Michael Mann movies. I used to sit around and listen to the director's commentary on Michael Mann DVDs. The man is a genius. The man is a genius. I love only his like action movies, only his like crime action movies. I haven't even watched his other movies, but I love that motherfucker's crime action movies. So I guess you call them like, action thrillers or whatever. I don't even know what genre he would put on those, but I love them. So, okay, that's those are good recommendations from you and James. I appreciate those both. Okay. Not that I have time to watch any fucking series, but occasionally I can squeeze one in. Okay. Everyone is asking. So this is probably the more important post. This one, as you can see, getting much less press, 147.5K views, right? It's getting way fewer views than that other one because it's a little less dramatic. It's a little too technical. Most people will never understand this fucking post. So I'm not going to bore you to death. Yes, Miami Vice was largely panned because he did the original Miami Vice, right? Which was fantastic, fucking fantastic, and basically turned Miami into what it was today. Michael Mann and his production guys actually went down to South Beach and repainted the fucking buildings on South Beach because they all had like peeling paint and shit when they first went down there. They didn't look good. He actually repainted those motherfuckers and made South Beach look the way it did in the TV series Miami Vice, which is the way it still looks today because it became so fucking famous. It was just like this little backwater back in those days, peeling paint on the buildings. Michael Mann fucking made Miami. And then later on, he made a movie with a certain actor who decided that the Sonny Crockett character should have a mullet, and there were problems. So I think he still made a good movie. The mullet was the problem in that remake. So anyways, we can talk about that sometime. So Crockett and Tubbs. Yeah, it's a great show. Miami Vice was fantastic for its time. Yeah, one of the all-time best series ever for its time. It might seem dated to people who watch it now, but back in the day, that was a shit, man. Motherfucker lived on a sailboat with an alligator. His pet was an alligator. Walked around in these ridiculous suits. He drove Ferraris, first a black one and then a white Testarossa that became even more famous. Show was fantastic. Fantastic. Okay, anyways, we won't talk about Miami Vice. Let's get to the topic here. Let's hit this. So let's read his little recap. As expected, the answer is trickier than the question. Is Jane Street why Bitcoin isn't at 150? As expected, the answer is trickier than the question, but it's also more structurally unsettling than the conspiracy theory itself. And once you understand the actual mechanics, you won't be able to unsee them. So I'm going to read a few things from this. This is going to be too dense and technical for a lot of people, but we're just going to go through a few of the very high points because I know if we start getting technical here, people are going to, lose interest. So let me just read the important parts here. So the billion-dollar question everyone is asking today, does Jane Street suppress Bitcoin price? The question deserves a precise answer. And the most important thing to understand up front is that it is not really a question about Jane Street. So let me give you the TLDR first. That'll make this a little bit less like watching paint dry, speaking of paint. The short answer is that no single authorized participant, we already said from that last little article that Jane Street is an authorized participant. No single authorized participant explicitly suppresses Bitcoin price. What the authorized participant structure can suppress is the integrity of the price discovery mechanism itself. So this is going to explain how this whole structure, which came from the equities sort of ETF world and was just sort of like superimposed on crypto, this is going to explain why it doesn't work on crypto and how it actually suppresses price discovery in crypto. Okay, let me hit a few comments before we do this. Bro, commentary on DVDs rocked. Yeah, it did. It did. It was awesome. Like being able to hear what a guy like Michael Mann was thinking about the movie. It's amazing. That dude is a genius. Pupper says, fuck Janes, want more Smoky Bones. I'm with Puppers. Wasn't Miami Vice by Man? Yep, we covered that. Yep, absolutely. Okay, yep. Okay. Sorry, I couldn't resist making sure I hit all the Miami Vice comments. Okay, so here's what's really going on. This is a question about a structural feature of the Bitcoin ETF architecture that equally applies to every authorized participant. I'm up here in the first paragraph. So for IBIT alone, the authorized participants, according to this article, are Jane Street, JP Morgan, Macquarie, Virtu Americas, Goldman, Citadel, Citigroup, UBS, ABN, Amaro. So the role of these institutions is genuinely misunderstood, even amongst seasoned industry veterans. And that misunderstanding is worth correcting. So the first thing to understand about APs is that they occupy a corner case in the regulatory architecture. We're not going to get into Reg SHO or any of that kind of stuff. But okay, so here's something important to know. So that regulation requires short sellers to locate shares before shorting, right? Like one thing that ever since the whole overstock thing, everybody kind of understands what naked short selling is, right? Even people in the mainstream kind of understand what naked short selling is. So this regulation requires short sellers to locate shares before shorting, right? This is kind of to mitigate naked short selling. But APs, we're not going to go into that right now. You can just Google naked short selling if you don't know what naked short selling is. But APs are exempt by virtue of their contractual right to participate in creation and redemption. So they're exempt from the requirement that prevents naked short selling. So it's like, what is the next logical step? What do you think is going to happen? If they're exempt from the requirement that mitigates naked short selling, what do you think is going to happen next? While this sounds procedural, the practical consequence is significant. Any AP can manufacture shares at will. And most importantly, no borrow cost, no capital conventionally tied up against the short, and no hard deadline to close the position beyond what is commercially reasonable. So here's the problem. They can short sell. They don't have to locate shares. So there's no protections that it doesn't become essentially naked short selling. It costs them nothing. It costs us. When we try to short things, it costs us. We have to borrow, right? You have to borrow. Short selling involves borrowing. You have to borrow that asset in order to short sell it. And you usually have to pay a cost to borrow it. So for them, that's not true. They don't have to locate a share before shorting, and there's no cost of capital here. There's no borrowing cost. So the bolded part here, this is the gray window, a regulatory carve-out designed for orderly ETF market making that is structurally speaking indistinguishable from a regulatory arbitrage with unmatched duration. So there's also no limit. Like they can just short something forever at zero cost, right? This is not a level playing field. The exemption is not unique to one firm. It is the condition of membership in the authorized participant club. The second thing, so that's the first thing to understand. They can short sell in ways that we are absolutely not allowed to, the ways we are not able to. The second thing to understand is that what that exemption enables in terms of position construction. So ordinarily, if IBIT traded below NAV, you would expect an arb buyer to step in. So if we've got these ETFs, right, it represents Bitcoin. If the value of the ETF drops below the value of the actual asset, arbitrage guys are going to step in and be like, oh, that's lower than the actual price of Bitcoin. I'm going to buy that because obviously it's going to come back up and meet the actual value of Bitcoin. So that's what you'd expect. you would expect them to buy the shares, redeem the shares for Bitcoin, and then so they would buy the shares of the ETF, then they would redeem the shares and get Bitcoin from the shares, and then go sell those shares to close the gap. But any authorized participant like Jane Street is the arbitrage buyer. They control the pipes, which means their incentives around closing that gap are not the same as a third-party desk operating without creation rights. They have creation rights, so their incentives are not the same as this party who would, act as an arb buyer, buy the shares, turn those shares, redeem those shares for Bitcoin, and then sell the shares, right? Jane Street is not going to do both halves of that. The short IBIT exposure could, in principle, be hedged with long spot Bitcoin. So you'd be like, okay, if somebody like a Jane Street is going to execute a short position, they could, if they're going to take a short position, they could hedge that by going long spot Bitcoin. Basically, you can give this buying Bitcoin the same way you and I do. But they don't need to do that, right? They don't need to do that so long as the chosen instrument maintains tight correlation. So instead of going long spot Bitcoin, they can go into the BTC futures market. So the implication here is they can use the futures market as the hedge rather than spot Bitcoin. So they can short Bitcoin and their hedge is just the futures market. They never actually buy at spot, right? So you can think of this on a highly simplified basis as in a normal world, if somebody was going to be shorting, shorting some exposure to, if they were going to take short exposure to the ETF, in a normal world, you'd be like, oh, well, they would take a long position in the spot market. That's not what these guys are doing. They're shorting the ETF and their hedge is just the futures market. So the conclusion here is the gap cannot close via the natural ARB mechanism because the natural ARB buyer chose not to buy at spot, right? It's worth noting that the spot futures basis is itself the subject of an entire cottage industry of basis buyer traders who work to keep that relationship tight, but each degree of separation between the hedge instrument and the underlying asset introduces dirty basis risk that compounds across the structure, and in stress conditions, basis risk is exactly where dislocations emerge. So, right, it's like they're doing the fantasy baseball thing. Instead of buying spot Bitcoin, they're buying into the futures market. So the hedge instrument, these assets they're buying in the futures market, these futures they're buying, they could diverge from the actual value of the asset. And you've got this little delta that's going to create this additional risk, right? This is the kind of shit that happened with all the fantasy baseball going on during the GFC. The final piece, so those are two things. These are two elements this writer wants you to understand. The final piece involves the SEC's recent approval of in-kind creation and redemption. I actually covered this on this channel. This is the idea that when you redeem your shares, they can just give you Bitcoin. So under the prior cash only regime, so prior to the SEC approving that, the ETF wouldn't have been able to give you Bitcoin. They would have had to give you cash. So under the prior cash only regime, the AP was required to deliver cash to the fund. So the authorized participant would have had to give cash to the fund. The custodian of the fund would then have used that cash to buy spot Bitcoin. That purchase was the structural governor. It forced spot buying as a mechanical consequence of creation. In kind removes it entirely. Any AP can now deliver Bitcoin directly, sourced at a time and from counterparties of their own choosing. So the authorized participant like Jane Street, they don't have to give cash to the fund. They can just give Bitcoin to the fund. The fund, if it got cash, would have to buy that on the spot markets, which would help us, right? Any purchase on the spot markets is going to help our bags. But instead, what's going on is the SEC decided to let the APs give them Bitcoin, which means the APs, because they're very capital efficient, they have all these connections, they're very integrated in the system, they're not going to go buy that Bitcoin on the spot market, which is going to pump our bags. They're going to go to places like OTC desks, which minimally impact the market. They're going to buy a bunch of Bitcoin from an OTC desk, and it's not going to register on the spot market. So we don't get that push up. We don't get that push up that we would be getting otherwise. In the most liberal reading, that flexibility, an AP could maintain derivative positions designed to harvest funding or volatility components across the window between when the short was initiated and when the in-kind delivery is made, all while each individual step remains consistent with the definition of legitimate AP activity. So he's explaining the end looks like normal market making. It's the middle that escapes clean categorization. So the beginning looks normal, the end looks normal. The fuckery is happening in the middle. This is the hole. This is the hole. They've overlaid these securities regulations onto the crypto markets. And just like, again, like Caitlin Long has been predicting for years, it's fucking everything up. She's been predicting this for years. In other ways, she's more focused on banking regulations, all the Basel stuff. But it's the same thing. They're using TradFi thinking and TradFi regulatory regimes and just laying them directly over crypto. And everything's already getting fucked up. And of course, the people who figure out how to exploit it are the smartest people. And I hate to break it to all of us. It's not us. It's these Jane holes. These Jane holes are the smartest ones. They're the ones who are going to figure out how to exploit it. They're the only ones who can, according to the regulatory regime, they're the only ones who can. And they're the ones who end up exploiting it. So I think I have, okay. If that was all just a bunch of word salad to you, you don't know what the hell I'm talking about, here is Grok trying to give you a simple explanation. Grok says, okay, folks, think Jane Street, a huge trading firm, is secretly shorting Bitcoin to cap the price at 90K instead of 150K. That's the allegation, right? But it's not about one firm. All big banks that help run Bitcoin ETFs, right, basically help make the market, we call them authorized participants, APs. Those guys all get special rules. We listed the ones who are APs for IBIT. They can short ETF shares easily without borrowing costs and hedge using futures contracts instead of buying actual Bitcoin, buying spot Bitcoin. Normally, if the ETF trades below Bitcoin's real value, they'd buy Bitcoin to arbitrage and close the gap. Again, they'd be buying on the spot markets, which would pump our bags, pushing BTC price up. Here, they often skip that, so the gap lingers and price discovery gets fuzzy. So this is how any AP, the way the system's set up, any AP can skip the second half of the equation that would normally push our bags up. They can just skip that shit, and price discovery itself gets tamped down. New SEC rules let them deliver BCC directly to, skipping forced spot buys. So in multiple places here, they don't have to do the buying on the spot market that would help the price, but they can do all the shit actually at zero cost to short the fucking asset. So they get to do all the negative shit that hurts our bags, and they're not forced to do any of this stuff that would normally happen to pump up our bags. So Grok's bottom line, no conspiracy villain suppressing price. The ETF structure itself can weaken how Bitcoin's fair price forms in the market. It's a regulatory quirk, not a plot. So, like I said before, this can all be true. And I think it is true. This is a hole in the regulatory regime, a hole in the system that's being exploited in multiple ways, as we've just covered. This can be true. And also, all of this stuff can be true. All the stuff in this article can also be true. It could be that they were engaging in trading on inside information, non-public information. They could have been trading on non-public information, which is a violation. And it could also be true that there's just this giant hole. In fact, this is not really an allegation. This is just someone describing how the system works. So we know there's a giant hole in the regulatory regime. And also the allegation has been made that these motherfuckers are a bunch of Jane holes insider trading on us, and also fucking up our markets. So basically, these guys might be fucking up our markets in multiple ways. Some of them legal, some of them maybe not legal. So this is what's going on with the Jane holes. Okay. Afro in the wind says GameStop. Yep. Afro in the wind, mother of all short squeezes. Yep. John Hammer Group made the Miami Vice theme song, by the way. Love their track. Don't you know as well? Checking recommended. Yeah, Jan Hammer. I knew that was the name associated with the song. I don't know much about that though. I listened to that shit so many times. I think I saw every single episode of the series when I was a kid. Definitely my favorite series of the time. I was pretty young, but watched all of them. And like every kid my age, definitely wanted a white Testarossa. Also probably wanted a bunch of linen suits and to wear them with sandals with no socks, like Sonny Crockett, and have an alligator. So not very realistic expectations. Do Not You says thumbs up. Ruandre says, yo, what's up, AOS? How are you doing? I don't know if you talked before I joined now. What do you think about the blood moon? I think it says something that said every blood moon marked some bottom. I didn't even know it was a blood moon, and I didn't know about this prophecy about blood moons marking the bottom. However, I have been watching Night of the Seven Kingdoms. So, things like prophecies and other things like that, are just part of the fictional world I've been I've been indulging in 1 hour a week as it came out. So I'm I'm a little susceptible to these types of things right now. So if you're telling me that anything marks the bottom, a blood moon or whatever, I'm probably game for it. We needed a bottom for sure. Okay, speaking of things we need, here's a little Clarity Act news. And I'm going to try very hard not to let my battery die today, so I'm going to keep an eye on the battery gauge here. It's going to be next Monday or Tuesday, I think. Okay, I'm going to keep an eye on this. There's someone in my household who very much likes to observe, these astronomical events, not for any mystical reasons, but just, scientifically likes to observe these events, like through binoculars or a telescope or whatever. So that's actually good information. So I will keep this in mind on Monday or Tuesday. Ruandre says it has happened many times in the past, marking the bottom. It's interesting, and this timing is too. Ooh, I like it. I like it very much. From the newsletter, no breakthrough yet on. This is Eleanor Terrett, who's been covering Clarity Act for us. No breakthrough yet on stablecoin yield negotiations, and there may not be a single defining moment, but draft language. When I say for us, I just mean for all of crypto. No breakthrough yet on stablecoin yield negotiations. There may not be a single defining moment, but draft language has been circulating since last week's meeting, signaling movement behind the scenes. Senate Democrats are meeting today on market structure. She reminds us the White House yield deadline looms as Stripe quadruples stablecoin volume. So while policymakers hash out disagreements over yield and rewards, stablecoin integration in traditional finance keeps growing. I think we're all aware of that. Stablecoins are doing very, very well. And meanwhile, they're all trying to, oh, look at that. There's a never ending story comment below. We better check that out. Clarity Act, the never ending story. That's a fantastic meme. Look at that. There's Volcor, and can't remember the name of any of the other characters. Sebastian, I think, and Volcor. Don't remember any of the rest of these names, but I don't think I see the turtle there. Is the turtle? Oh, maybe that's the turtle right there. I can't tell. There's the Atreyu. Was Atreyu the horse? No, Atreyu was the kid. Atreyu was the kid in the story that Sebastian is reading. In the never-ending story, Atreyu is the kid, right? And what was his horse's name? I can't remember. Anyways, so not much is happening on the Clarity Act. And I kind of, like I've said from the beginning, I don't know how they can possibly make a compromise. It's kind of a zero-sum game, right? What crypto wants and Coinbase needs is the exact opposite of what TradFi needs and wants, right? Somebody's going to lose deposit market share here. Either Coinbase and the other centralized exchanges get the deposit market share, or TradFi keeps the deposit market share. So it's a zero-sum game. I think the government is going to have to be the tiebreaker. I don't think they can really come to a compromise. It's like there's a bag of money up for grabs, and both sides want the whole bag. So somebody's going to have to do the cutting in half. Somebody's going to have to decide where the sword drops on that one. This is interesting. So here's some really good news. This is some of the best news we've gotten in crypto in a long time. So I mentioned when MoneyGram, when it became clear that MoneyGram was one of the 7 midnight federated network validators, this was a really good sign for RealFi. I think RealFi is the direction we have to go in. I think RealFi is the most important thing that can happen in crypto. Like RealFi as made possible by midnight, right? That's where the big opportunity lies for us right now. I think that's the big thing. And MoneyGram coming along, I was like, this is fantastic, right? Money remittances. This has RealFi written all over it. We've got 2 more. We've got 2 more that have RealFi written all over them. Let me just these comments real quick. Midnight night fireside chat just ended up looking like a Nigerian prince pitching to send me his fortune in exchange for a small fee. I'm long, but it did not inspire confidence. Oh, I'm sad to hear that. I'm sad to hear that. I haven't watched it, but I'm sad to hear that. Omar says winter is here. How do we this whole discussion about Jane Street is disheartening for sure. How do we stop the APs from fucking us over in this way? We need to get Congress to lay out better regulations for crypto ETFs. We need to lay out a better regulatory regime, but that's like so downstream from just getting categorization of assets, like market structure. We need market structure first, but the way to solve this particular problem, I don't think the SEC or the CFTC or these agencies can do it on their own just because of the way things are set up now. I think it would take an act of Congress to fix this. It's like too fucked up, and like it's just business as usual for Wall Street. So sadly, I think that's where we are. Okay, since that was so disheartening, let's talk about some positive news though. So I've already talked about how I think MoneyGram has goddamn RealFi written all over it. This is such a good sign for RealFi. I really think RealFi can be the thing that redeems crypto. This is the real doing real commerce, doing real business, doing real shit part of crypto that we need to get to now that we're past all the meme coin, NFT, all the ridiculous casino shit. Like this is the thing we need to get to next. The MoneyGram thing was big, but we've got 2 more big ones. So check this out. Vodafone. When you go to Vodafone's site, right? Vodafone has this big section laying out some very interesting stats. This section is all about connecting Africa. So look what this says. Connecting Africa. Vodafone. We're committed to enriching people's lives in Africa, evidenced by our strong presence there for nearly 30 years. Today, we connect over 227 million people to mobile and 92 million to financial services across the continent. So think about that. I've said on this channel for a long time, the case is very persuasive that because a lot of Africa has skipped the laptop and desktop phase and gone directly to mobile, RealFi in Africa is going to have to happen on mobile, which is great, right? It's going to happen on mobile. It's not that it has to, it's that it's great. It's going to happen on mobile. We're talking about almost 250 million people just in Vodafone who are on Vodafone Mobile. And we've got 92 million already on Vodafone Financial Services. So Vodafone's already doing mobile. They're already doing financial services. And they're in many countries in Africa already, right? Our population coverage with 4G in Africa has reached 76%, up from 66% in 2022. This is RealFi. This has got RealFi written all over it. They're already going to be a validator on the federated mainnet on midnight. This is great. If Vodafone's in, we're talking about a built-in user base in a place that can use RealFi. It's not the only place in the world that can use RealFi. There are a lot of other places that can use RealFi, but this is a great place with awesome demographics. Some parts of Africa have amazing demographics, the likes of which the more industrialized world will probably never see again. So they've got great growth potential. And if we can do RealFi in Africa, that would be a wonderful thing. So here's some more on Vodafone's African reach. So let's see, here we are. Okay, here we go. The group covers mobile networks reaching more than 500 million people and emphasizes financial inclusion with 77 million customers using its mobile money services as of fiscal year 2025. Is this not a dream partner for RealFi? If you're doing RealFi and there's somebody out there who has 77 million customers in, I think that number is just Africa, just in sub-Saharan Africa, or probably, no, it includes Egypt. And I think I saw some other countries in the Maghreb. So it's not just sub-Saharan Africa, but all of Africa. But 77 million customers on the continent already using their goddamn mobile money services. This is like the perfect integration partner for RealFi. Fantastic, right? Fantastic news. So Omar says, if I say what I'm thinking, I would be opening myself to serious liability. I believe that was probably about Jane Street. This Congress is completely useless. Also probably true. I mean, that's probably true of every Congress, but definitely this one. Rest in peace, Charlie Kirk says, what up, Jane Holes? Pretty much. And I mean, Vodafone, that's just one part of the world. Here are the numbers on Europe. They're Asia Pacific numbers. I mean, there's some places, Latin America numbers. I mean, there's places all over the world that could use RealFi. Africa is just a great example. So another partner, if we go back to that post, you can see we have both we have MoneyGram, Vodafone, and Pearpoint. You're probably like, who the fuck is Pearpoint? That was my question too. So Pearpoint, I believe it's probably this Pearpoint where tech, trust, and transformation connect. Okay, that's a bunch of, I don't know what those words mean, but they sound good. They sound like, crypto, RealFi kind of words. But then you read this, Pearpoint, a joint venture between Vodafone and Sumitomo. Now we're talking, is a global leader in digital integrity, providing the intelligent foundation for a trusted Internet of Things. I'm like, Internet of Things? Are we really into IoT these days? Maybe, maybe not. But they say, by integrating quantum resistant security with AI driven verification. Okay, quantum resistant, that's good for crypto. Pearpoint enables organizations to build absolute certainty in their connected ecosystems. Okay, good. Our platform ensures that every interaction across data, devices, and people is inherently secure and tamper-proof. Okay, that sounds good. Empowering businesses to operate with total confidence in an increasingly complex digital landscape. So this sounds good. They have a lot of stuff about cars, about a lot of auto stuff. Then you come down here, secure VPN, logistics. I saw this logistics thing. I was like, interesting, logistics. There's a lot that can be done in RealFi with logistics, in-car payments, secure identity, and digital services. Did you see that last one? In-car payments, identity, and was it in-car payments, identity, in-car payments, secure identity, and digital services. This is really interesting. So you can tell there's a lot of like auto focus here, but in-car payments, secure identity, these are things that sound very RealFi-esque. Yeah, Vodafone's all over this. This is the first thing I thought of too, what Brown Bearders bringing up. Sounds like some serious competition from World Mobile. Interesting. Yeah, World Mobile, this isn't exactly what they want to see, because obviously World Mobile has kind of spread its wings. It's, it's not just a Cardano thing anymore, which is either good or bad, depending on your perspective. But World Mobile is doing a lot of other things. All of a sudden, Midnight makes a big deal with Vodafone, right? Vodafone, World Mobile, it's they're trying to do mobile things, but Vodafone is a big mobile outfit with a lot of reach. So I also thought that was very interesting. But this is obviously a joint venture of Vodafone's in-car payments, secure identity, and digital services. I thought that was very interesting. There have been crypto blockchains in the past who've really tried to focus on the in-car thing. Like one of them had like maybe the beginnings of a deal with BYD. I won't even say which blockchain it was. Some of you will probably know, but they kind of had this rumor that they maybe had a deal with BYD to do in-car carbon tracking, or carbon credits in EVs or something like that could be sold to industry. Like there's a lot of use cases involving cars and crypto for various things. But what these guys, Pearpoint, are saying about cars, in-car payments, secure identity, digital services, that is very crypto, very real fi. A lot of good use cases we can come up with having to do with those things. So I think this is pretty exciting. I think this combination of Vodafone that has this giant reach in places you'd be very interested in if you're into real fi, has this giant reach, and they also have this joint venture. They also have this joint venture between them and Sumitomo to do some very interesting things in cars. Like I kind of think, Charles, seeing these seeing these um seeing these kinds of validators on the federated mainnet makes me believe that our man Charles has a grand plan. He has a grand strategy, and he's gone around and sold some pretty big players on this. Google Cloud, uh, MoneyGram, Vodafone, Pearpoint, eToro. These are all, you can imagine. It's sort of like that part of the movie. Rick and Morty did a great episode of this, but the kind of movie where it's like they're putting together their little squad to go pull off, the robbery, the kind of Ocean's 11 kind of thing. It's almost like Charles was like, okay, we're gonna go do real fi. Who's gonna be a part of our heist team? Let's put together the heist team. And then he's like, okay, we need some like money remittances guys, MoneyGram. And then we need the phone guys, World Mobile. They already left Cardano. It's not gonna be World Mobile. What about Vodafone? Let's get Vodafone. And then they were like, oh, Vodafone has this other thing with Sumitomo where they've got like some shit going on in the cars that involves identity and payments. Let's get that. Let's do this real fi thing, And then they're like, okay, let's get Google Cloud in there. We can. We need an exchange. Let's get eToro. Like, this is like the real fi heist team that Charles has put together, Go watch the Rick and Morty episode on this if you don't know what I'm talking about by Heist Team, or just watch like Oceans, whatever. I can't remember what number the first one was, but okay. Johnson won't even go after the congressman who harassed his female employee into self-immolation for fear of losing his hair thin majority. I don't think I even know about this, Omar. I'm very curious. I'm very curious. It sounds familiar to me, but I don't think I even know about this episode. I'll have to go research this because I don't know. I don't know. The self-immolation part sounds familiar, but I don't know about it being. I don't know about the first part of that. I don't know anything about the first part of that. But that's very interesting. Charles has made it clear recently it's now or never. I agree with that. There is fucking urgency on this. There's urgency on this, and I'm glad there is. So Ocean's 8 or 9. Okay, I think that sounds right. That sounds right to me. Did I see something about Larry Fink taking an interest in Cardano? Wow. I don't know about that one. That's wild. If that's true, that's very wild. I mean, what I love about Cardano is most of these very, very powerful guys, they didn't get there by being stupid, right? They're not stupid guys. Sure, they might make stupid decisions. They might invest in things that just don't pan out, but they're pretty, they're a lot of them are pretty high IQ. I would put him in that category. Like, he didn't get there by being a low IQ guy. So I have this faith that high IQ individuals are going to gravitate towards Cardano from an architectural standpoint. I mean, you could also be a very high IQ person and say like, okay, Solana is kicking ass or Ethereum is the standard, and that's going to be the principle that guides my selection of area of interest, of blockchain of interest. That could also be a high IQ decision. But from an architectural standpoint, when you find out about how decentralized Cardano is in terms of validation and distribution and governance, and like the very, very smart architectural decisions. And you listen to a few of Charles's whiteboard type videos. Like, I could see smart guys like that just being naturally drawn to Cardano, just like all of us, because I think the Cardano crowd is pretty smart, actually. So they just know how to take advantage of the stupid people. Those people exist too. I've definitely encountered many of those in the corporate world. So I've encountered many, many of those. So both on my side of the table and the other side of the table. So Anyways, let's we've got more to cover, guys. We've got some more to cover. So let's try to get through it here. Okay, we covered Vodafone, we covered Pearpoint. I didn't know what the hell Pearpoint was when we first went there. So this is a good example. It's important to remember, as tough as it is not getting the Clarity Act as fast as we want. I agree with this, Hill Dog. I do agree with this, but I could see somebody saying like it doesn't matter. They're winning. Somebody could have watched them the last cycle and be like, these guys kicked ass. I'm just going to go with them because they won, because they did well, right? They did great last cycle. So I'm going to go with them. That alone could be a smart strategy. I don't think it's a smart strategy, but it's like a valid strategy. I should put it that way. So, okay. So here's something to think about. We sort of bemoan how things are going with the Clarity Act, but it's easy to forget that it wasn't that long ago we were here. So this was a post that Paul Graywall, the chief legal officer of Coinbase, made in October of 2024. Today, Coinbase filed an amicus brief on behalf of this project to stop the destructive regulation by enforcement campaign waged by the SEC against law-abiding American companies. Most destructive of all is that the SEC can't even make up their mind basically about what the regulations are. And he has this great table that explains how the SEC was just kind of like, deciding whatever it wanted the regulations to mean, depending on what its agenda was at the moment, right? In 2018, they had a different answer than in 2021, then in 2024, then 5 days later in 2024, then 8 months later in 2024. And they did this over and over again on different issues. And it was obvious the Gary Gensler SEC was just, put in, he himself admitted he wasn't even a lawyer, right? He's running the SEC, wasn't even a lawyer. So people ask him legal questions like, what does this mean? What does this law mean? What does this regulation mean? And he would be like, I'm not a lawyer. How should I know? I just taught a crypto class at MIT. And, I worked at, I think he worked at Goldman, right? He worked somewhere. I think it was Goldman. But, it's like legally though, they would sort of answer legal questions in totally contradictory ways depending on what allowed them to do their regulatory enforcement. That's where we were not too long ago. Not too long ago, we were there. So we've made a lot of progress, guys. We're in a much better place than we've been in a long time. So we have made some progress. Things seem a little bogged down right now, but actually it's so much better than it was just a couple of years ago. So yep. Omar agrees with Hilldog on Solana sucking, as do I, of course. Okay, here's something I thought was interesting. Andre Karpathy, if he to me, he's one of the most interesting guys in all of AI. He's not getting as much like attention or coverage as he did in the past because, different people are inventing the latest stuff. Right now, the most popular guy on the the podcast circuit is the guy who created OpenClaw, and that'll change. Other guys will start making the rounds. But as far as somebody who really seems to understand what's going on in crypto, if you go back and watch Andre Karpathy's podcast with Lex Friedman, very, very interesting. Now it's out of date. Things have changed so much. And that's kind of what he goes over in this little post. So in this post, which was from today, he says some interesting things. It's hard to communicate how much programming has changed due to AI in the last 2 months. He's like, things have changed immensely in the last 2 months, not gradually and over time in the progress as usual way, but specifically since December, he thinks things have changed immensely. There are a number of asterisks, but in my opinion, coding agents basically didn't work before December and basically work since. The models have significant higher quality, long-term coherence, and tenacity, and they can power through large and long tasks well past enough that it is extremely disruptive to the default programming workflow. Just to give an example, over the weekend, I was building a local video analysis dashboard for the cameras at his house. He goes through what he told the agent, like basically the prompt he gave the agent. And it's like the prompt is only this long. If you can see what I just highlighted, the prompt is like that long. The agent went off for 30 minutes, ran into multiple issues, researched solutions online, resolved them one by one, wrote the code, tested it, debugged it, set up the services, and came back with a report, and it was just done. I didn't touch anything. All this could have easily been a weekend project just 3 months ago, but today it's something you kick off and forget about for 30 minutes. Programming is becoming unrecognizable. You're not typing computer code into an editor like the way things were since computers were invented. That era is over. You're spinning up AI agents, giving them tasks in English, and managing and reviewing their work in parallel. The biggest prize is in figuring out how you can keep ascending the layers of abstraction to set up long-running orchestrator clause. He's talking about open clause. You just set up long-running open clause, which are going to be your orchestrators with all of the right tools, memory, and instructions that productively manage multiple parallel code instances for you. The leverage achievable via top-tier agentic engineering feels very high right now. It's not perfect. It needs high-level direction, judgment, taste, oversight, iteration, and hints and ideas. Notice he didn't say like code interventions. He says high level direction, judgment, taste, oversight, iteration, and hints and ideas. None of that requires you to be a previous coder. It works a lot better in some scenarios than others. For example, especially for tasks that are well specified and where you can verify test functionality. The key is to build intuition to decompose the task just right to hand off the parts that work and help out around the edges. But in my opinion, this is nowhere near business as usual time in software. Just want to throw that out there because just a few months ago, if anyone had said this kind of thing, even inside Cardano Twitter, they got attacked. They got attacked by people whose careers this could disrupt, right? They get attacked. And you'd hear the same things we heard 5 years ago, like AI is not taking over my job anytime soon. Here's Andre Karpathy, right? A guy who worked for OpenAI, who worked for Tesla AI, a guy who's been on the inside of some of the biggest recent innovations in crypto. And he's telling you this is not normal. And he's doing all of his coding in English. Brown Beardo says, as long as we can teach AI to do tasks in Cardano, we will be A-okay. So yeah, I think there's a big opportunity in Cardano here. I'm gonna call it not business to consumer, not B2C, not B2B, business to business, but I'm gonna call it, at first, we'll trick people into believing it's business to agent, business to AI agent, business to agentic AI, but really it's gonna end up being agent to agent business. That's going to be the thing. And we just need to provide rails for them to do that on Cardano, right? Granted, there's the argument that they're just going to create their own bespoke rails to do whatever they want because they can just whip anything up in an instant. But what they can't whip up is a community that makes a blockchain decentralized, right? We can provide decentralized rails to AI to do A to A, not B2B, not B2C, A to A. We can provide decentralized rails that they can trust, and that will have value because they can't just whip that up with code. So Bramberto says business to machine. I want it to be machine to machine. I think we should be the rails that machine to machine business is done on. Representative Tony Gonzalez harassed his aide for sexy pictures until she set herself on fire. Damn. She left a husband and 3 children. Damn. That is, man, that's sad. Mike Johnson is protecting his seat to preserve his majority. Oh, that's terrible, dude. That's terrible. That's terrible. That's terrible. The problem with machine to machine is it sounds too much like the Terminator. I think if we call them agents, it sounds like they're working for us, even if they're really not. And humans will accept that. It'll be a little bit more palatable to humans. Machine to machine sounds like the Terminator. I don't think that's going to be as palatable to humans because machines are always like the pejorative term they use to refer to AI robotics in all of the dystopian movies. So I don't know if that will be as palatable. You're right though. I'm not saying you're not right. You're definitely right. Okay. Raoul Pal. Every time I mention him, every time he says something smart, I have to mention he's no friend of ours. He's not a friend of Cardano. He's not our boy. Raoul Pal is not our buddy at all in Cardano, but he does say, and he's wrong a lot. He's wrong a lot, but he also says some very interesting things, and I think this is one of them. So I always assumed the TAM, total addressable market, of ubiquitous technology such as the internet, crypto, or AI was the population of the world. you hear this a lot, right? Back in the day before AI, you'd hear people say the real TAM is the world, right? So here's what Raoul Pal is saying. AI agents will 2x the users of all of these. He's saying these ubiquitous technologies, internet, crypto, AI. It'll 2x the users of all these in 5 years. Agents are more disruptive of TAM than they are of businesses. Your priors need adjustment. And I think he's right about this. This is why I say that we need to think about A to A business, agent to agent business. We need to think about how we can be the rails for that, because it might be most of the business. That's the scary thing. It might be most of the business. And you can say like, um, hey, there's a human eventually who's going to siphon off those funds, right? You can say that there's a human there eventually, but it's like, how involved is that human, right? Probably the human is showing up to siphon off the crypto funds every once in a while, tap into those crypto funds like Vitamin Butters selling off ether. That's how involved the human's going to be. And if they're going to be most of the business, if most of the business is going to be A to A, we should try to be the rails for that, because the other way to say this is, in the future, it might not be businesses, it might not be companies, it might not be corporations. Barometer says he's not your buddy, Guy. Agreed. Another great animated series. The I should ask I won't get him. That gives away too much my location, but Raoul Pal, not a friend to his haircut. Raoul Pal. I haven't seen his latest haircut. I've not seen he's an older guy. Raoul Pal is an older Gen Xer. I am like a very young Gen Xer. I fit into that. People try to call us Zennials because we're right at the end of the Gen Xers. So technically I'm the same generation as him, but he is quite a bit older. He's quite a bit older. Okay. Oh, Kyle Chassé. Okay, you brought him up last night. He made a video recently about Know Your Agent, KYA. It will be like KYC for agentic crypto transactions. So we'll see. I mean, Congress is going to try that. So we'll see if they can pull that off, right? They're going to try to have KYA, and they will be able to have KYA for certain things. But the problem is crypto is permissionless. So we'll see. I mean, they can have that for like off ramps into fiat. But the question is, if we're successful in crypto, how much are the agents going to want to off ramp into fiat? Like, their owners might, but if we're successful in crypto and you can like buy houses and cars and things like that with crypto, and eventually like food and coffee, like I want, how much, if crypto is actually successful in its goals, how much are they going to need to off ramp? And if you don't need to off ramp from crypto, like, what levers does the government have to enforce KYA? That's my question. It'll happen, of course, but if we're successful in the short term, it's going to happen, of course. But in the long run, it's like, it's like the Neo and Morpheus thing, right? It's like the Neo and Morpheus crypto meme, right? Morpheus tells Neo asks, like, what does Neo ask him? Are you telling me in the future I'll be able to sell my Bitcoin for $1 million? And Morpheus says, what if I told you in the future you won't have to sell your Bitcoin? It's like, that's the future we're really trying to get to. And in that future, because real crypto is permissionless, I don't know if KYA is possible, right? Or KYC, really. Check the video. Okay, I still don't know who he is, so I'll try to check it out. I still don't know who the hell he is. So, but I'll try to check it out. Okay, let's move on here. Sorry, I keep getting distracted because there's like entertaining themes tonight. Keep getting distracted, and we need to move along in the tabs. So this is something kind of interesting, right? I think things are so polarized politically that we're starting to lose track of, and this doesn't just apply to the US. This could apply to any country that's as politically polarized as the US is getting. And I think actually a lot of countries are, even countries you wouldn't suspect, like the country that where I often go, that's on the other side of the world, it is also experiencing some of the same exact things. And I think people outside of that country don't realize what's going on. So it's not just the US this is happening to, but I thought this was like kind of emblematic of all of that. So this post is basically pointing out how the New York Times is covering two different athletes, one team of athletes, and one individual athlete in very weird ways. So the post says how the New York Times covers a trader winning medals for our greatest adversary. So I'm not necessarily agreeing with that or co-signing that, but this is the post. How the New York Times covers a trader winning at medals for our greatest adversary versus how the New York Times covers our boys winning medals for the glory of the U.S. This is very U.S. centric, and I know a lot of people listen to these videos are not from the U.S. I get that, but I thought this was an interesting commentary on very polarized political systems, right, and what the media can do by choosing sides. So here are the posts that this poster is disturbed by. So this is Eileen Gu, right? Obviously competed for China. Eileen Gu was the highest earner at the 2026 Winter Olympics. The scientist, politician, skier, model, and student is like a magician. The audience dazzled by her mastery, but somewhat irked by how she does it, our columnist writes. And then they have a little quote from her. So it's a very glowing, very positive portrayal of this athlete who could have competed for the US, but instead competed for China. And I think they even say, yeah, she made the most money of anybody at the Olympics, right? So money may have played a role in who she competed for, but their portrayal of her extremely positive, right? Which is fine, right? If that's their viewpoint, I think that's fine. But what sucks, and I think what's disturbing to people like this poster, is this. Things are so slanted politically that the U.S. men's hockey team, who won gold, gets this. It's nice to be feted as a winner, as the U.S. men's Olympic hockey team has been, but who's celebrating you and why they're doing it matters more. Athletes would be wise to recognize that in this climate, celebration is easily repurposed into political capital. It's like, hey, U.S. men's hockey team, you just won gold over Canada, which is amazing, but don't celebrate it. The wrong political side might repurpose that. In a nation this polarized, the proximity carries weight, whether the players are being intentional or merely naive. It's like, you're naive for celebrating winning the fucking Olympic gold medal. How dare you bastards celebrate winning the Olympic gold medal? Like literally the most famous game any U.S. Olympic team has ever played was when the U.S. men's hockey team beat the Soviets in, what do we call the game? The Miracle on Ice. Literally the most famous game ever played by any U.S. team in the Olympics ever, right? And then the U.S. wins Olympic gold again, right? And they're like, how dare you celebrate? The wrong political side might repurpose your celebration. You're naive for celebrating. You should have not celebrated. So I thought this was a very interesting example of how slanted and polarized the media can get. They will even talk shit about their own nation's Olympic team winning gold, right? This can only happen in certain nations that are so polarized like this. Most countries I go to, man, I've been in countries where they have like one Olympic gold medalist ever, or like one who's still alive. I've been in countries like that. And shit, if they have a guy that like even makes it into the Olympics, they're like stoked. They would never talk shit about that guy, right? Or lady, whoever it is. They would never talk shit about them. And here we are. Our guys win the Olympic gold, and they're like, fuck you guys for celebrating. How dare you celebrate? It's terrible. Terrible. Pucky Hawk says, Pucky Hawk, whose name is Pucky Hawk. Obviously, I was into the hockey games. USA kicked ass, rock on. The New York Times has never been your buddy guy. It goes all the way back before World War II. They've always been like this. How anyone reads that rag is beyond me. Good point. I watched the Miracle on Ice, and oh my God, the celebration was legend. Wow. That would be a sporting event to watch. Good for you. Good for you. That's a good one. That's a good one to have watched. That's awesome. Yeah, there's the New York Times for you. And meanwhile, they also broke some of the December 2017 UFO news. So, it's like very weird. Okay, so after that depressing news item, I thought I'd cover something that's either very interesting or absurd, depending on your perspective. So this is Jimmy Corsetti. You probably know him from him covering the Eye of the Sahara, possibly being Atlantis, that whole theory, which, you may believe is complete horseshit or not. But here he has something kind of interesting, right? And this might make the rounds. And I don't know. I'm going to tell you what I think about this, right? So we have this question. What's the oldest writing in the world? What's the oldest thing anybody ever wrote that we've recovered, right? And, most people, if you ask them this question, they're going to be like, oh, this is Sumerian cuneiform, right? From ancient Mesopotamia. That's the oldest writing we have. That's the answer most people are going to give you. And I guess there's been this recent discovery in a cave in Germany. And while cuneiform goes back 30,000 years, they're dating this at 38,000 years. So here's the problem, right? Okay, so here's what cuneiform looks like. You're familiar with this. It's always like the little triangular thing. It looks kind of like a thorn off a rose bush. And it's like various organizations of those little like rose thorn looking things. And it's obviously writing. Like this is writing. We know this is writing. Here's the German thing. I don't know if this is bone or a stick, and this is obviously like an image. But here's my problem with this. Like, okay, you can see some notches over here, and then just like, there's notches, and then there's just like these little divots. My problem with this is because I grew up like in the 80s and the early 90s when when like little boys had sticks and knives to play with. Like I don't know how, it probably wasn't like this everywhere, but we all had knives and sticks. Like we would make shit like this all the time. And maybe we weren't carving like full on like human figures like this on the one side, but this piece they're saying is writing. We would carve shit like this all the time, and it definitely wasn't writing. We were just carving shit. Like I think I probably carved shit that looked exactly like this, and it definitely wasn't writing. So I'm like, if I could do that when I was like 8 or whatever, I don't know that I'm convinced. I don't know if it's very persuasive. This is actually writing. Like this to me, definitely writing. I believe the Sumerians in Mesopotamia were writing. Whatever dude in Germany in the cave made this, I'm not convinced this is writing. I don't know. You guys tell me how you feel about that. Maybe some of you are convinced. I hope somebody's convinced because I'm like not convinced. um, Nico, hello. Thank you for joining. Do not use says yellow. Yellow. Is that a reference? Oh, you're saying hello to Nico. Okay. I don't know. To me, I'm not convinced that's writing. I do agree with the Graham Hancock, sort of the Graham Hancock recent idiom, like things just keep on getting older. I think that's definitely true. Like every time we turn around, we figure out like, oh, there's footprints in White Sands, New Mexico that seem to be 100,000 years old. That's like way, way before we thought humans were in North America. Like all that stuff is going on, and there was the discovery in Patagonia, that also went back before people thought humans had crossed the land bridge from Asia to North America, all those things. Like things do keep getting older. I'm not sure this is good evidence that the earliest writing has gotten older. I think we might be getting a little lax here. I don't know. Maybe there's something about this that I don't understand that's not evident from this photo that makes it writing. But I think a lot of people down below here are also not convinced this is writing. Writing or counting marks, somebody says. So this is from South Africa. This is something different. Here's a different view of this. Somebody is pointing to some other stuff. Oh, here's Graham Hancock right here. Stuff keeps on getting older. I agree that's true generally, but this is definitely writing. Cuneiform is definitely writing. I'm not so sure that this stuff is writing. But anyways, cool discovery. I think we will discover some writings that are older than cuneiform because this looks like pretty advanced writing to me, actually. This looks pretty advanced, so I believe there's probably something before this for sure. But on the IR front, not much to report today except this, which is pretty big. According to the AP, the Associated Press, all American naval vessels stationed at the U.S. Fifth Fleet headquarters in Bahrain have left port and moved into open waters. Satellite imagery reportedly shows the harbor now empty. So this is really interesting. Why would you do this? You would do this if shit was going to kick off in the near future and you didn't want your naval vessels to be sitting ducks in a location where they're easily located. So that is a sign we might finally be getting closer to resolution on this issue. Probably not even resolution, but the beginning of whatever's going to happen. So Brown Beardo says that writing looks like any random object I picked up, fiddled with during a long and involved phone conversation. I bet it means nothing. That's my feeling. I feel like it means nothing. But I think we've got some cool stuff going on in Cardano right now. I think Charles might be hatching a grand plot in terms of RealFi. And I think he's been through so many of these hyped up events in Cardano where, you know, people complained about being disappointed or underwhelmed or like he oversold something. I think he's been through enough of those. He might be hatching this grand plot in RealFi, and we're only seeing the tip of the iceberg on this right now. I think we're just seeing like the players, the heist team he's assembled. I think we're just like seeing the players coming together here, but it kind of, to me, it's indicative of him having a grand strategy to make RealFi a thing. And between me and all you guys, that might be the best thing that's ever happened to crypto, for us to finally be doing some of the shit that we always hoped crypto would be doing. So I think things are looking up in crypto. It's really disheartening news, all the stuff we're reading about Jane Street right now. But 2025 was disheartening. So if that's what caused all of it, it's good to know who our enemies are, right? It's good to know who fucked us last year. You know what I mean? It's good to know who the big villain was. If this is the villainy we were subjected to, who knows? But anyways, I think we're finding out new things in crypto. I think things are looking very promising in Cardano. I hope everybody's had a great week so far, and I will talk to you soon.